Okay, so let's continue from where we left. Let's continue from where we left. Last time we were discussing about how to prepare a cash flow statement, and we had learned how to prepare it using a method we were calling the indirect method. That's the method, you remember, we discussed. We discussed a method of how to prepare cash flow statement using the indirect method. Of course, we shall come back to it. But then today, we want to look at another method of presenting your cash flow statement. We want to look at another method of presenting cash flow statement. And I told you there are two methods. There is what we call the direct method and the indirect method. So we looked at the indirect method. Now we want to talk about the direct method. The direct method. Now, for the direct method, don't write. I'll give you time to copy. For the direct method, by the way, I also told you first, before we even continue, that the difference between the direct method and the indirect method of presenting the cash flow, I told you the only difference is in the presentation of the operating activity section. The only difference is the section called the operating activity. Otherwise, I told you that how to present the investing activities, how to present the financing activities remain the same. So let's remind ourselves, because I told you, by the way, that this is not a new topic at this level. This is not a new topic. You must have covered it before. Okay? So let's remind ourselves, how are you presenting cash flow statements from operating activities using direct method? If you remember, to get the cash flows, don't write, to get the cash flows from operating activities, using the direct method, there are three figures you need. 1, 2, and 3. Those are the three figures you need when you are preparing your cash flow statement using the direct method. I do hope you remember these figures using the direct, not the indirect. We looked at the indirect method last time. Of course, we shall come back to it later when we are doing an example. You remember, for indirect method, we talked about how to get the cash flows from operating, where we were saying get the profit before tax, adjust it with all the non-cash items. Then we were adjusting with working capital items and minusing the tax paid. And we were getting that amount called the net cash inflow or cash flow from operating activities. Then the investing and so on. But now, to get the cash flows from operating activities using the direct method, I do hope you remember that one figure you need is what we call cash received from customers. To get the cash flow from operating activities using the direct method, we normally need one figure called cash received from customers. The other figure you normally need is what we call cash paid to suppliers. Cash paid to suppliers. The other figure you normally need is a figure we normally call cash paid for services rendered. Cash paid for services rendered. So these are the three figures you normally need to determine the cash flows from operating activities using the direct method. Listen, once you get those three figures, you normally get the total there. Then you normally come and minus what we call the tax paid. Once you minus the tax paid, then whatever you get there, that is now what you get as your cash flow from operating activity. If you use the other method and you got 20,000 as your cash flow from operating activity, even this method should give you the same 20,000. And that's what we want to talk about now. How do you go about determining? Now, listen. I hope you still remember that whenever the examiner used to require you to prepare cash flow using direct method, none of these three figures, none of them were you given. It was normally your responsibility to calculate the figures. It's not it's not like the indirect method, where for the indirect method, there are some figures you pick from the income statement and put, from the additional and put. When it comes to direct method, to determine cash flow from operating activities, none of these three figures are you given. Meaning, it is normally your responsibility to calculate how much is the cash received from customers. As a business, how much did you receive from your customers? We shall talk about that in a short while. 2, how much was the cash you as a company you paid to your suppliers? We shall talk about that in a short while. 3, how much was the cash you paid for all the services that were rendered to you as a company? How do you determine them? Good. Now, before we continue maybe, let me talk to the new students. Let me talk to the new students who are here today, because again, today is a free class. Today is a free class. First, I would ask you to subscribe to our YouTube channel. Please subscribe to our YouTube channel. If you have not subscribed and you are here, please click on that subscription button down there so that you subscribe, so that in case we post some new videos in the YouTube, you will be able to be notified. So please click the subscription button so that you subscribe to our YouTube channel, so that you subscribe to your YouTube channel. You can also click the notification bell so that you are notified. Now, that's one. The other thing I want to talk to the new student about is this. Listen. Sometimes you may be disconnected when you are watching a live video. And whenever you are disconnected, in case you will be disconnected when you're watching a live video, the point is, how do you come back to class? If you click on the disconnected video and it doesn't bring you back to class, what you can do are 2 things. 1, you can refresh your page. Normally, on the top left or on the top right of your page from where you're watching this page video from, normally there could be a refresh button. Click on that refresh button and it will bring you back into the class. If your gadget does not have the refresh button, then go back to the group where you received the link and click on the link again, and it will bring you back to class. It will bring you back to class. Good. So that is for the new students who are not aware of the mechanism. Otherwise, for everybody, if you have not subscribed to my YouTube channel, please subscribe. Click on that subscription button down there. Good. And subscribe. So let's continue now. Let's continue. So I want to take you through, listen, I want to take you through slowly now on how to determine each of these 3 amounts. 1 is what we are calling the cash received from customers. Listen, we are not saying cash received from debtors. We are calling it cash received from your customers. From all your customers as a company, from all of them, how much did you receive from all your customers? Listen, there could be customers you sold goods to on cash basis. There could be customers you sold goods to on credit. From all of them, how much did you receive from all of them? That is the amount we are calling cash received from customers. Now listen, to determine the cash received from customers, we shall be preparing a debtors account. This is where now you will be required to apply your knowledge. Listen, this is where now you will be required to apply your knowledge of control accounts. Where, listen, From your knowledge of control accounts, you will feed in everything concerning data. From this topic of cash flow, you will go through the question looking for anything that affects customers. Once you feed in everything that affects your customers, as far as cash flow is concerned, there will be one missing figure. And that missing figure is what now becomes your cash received from customers. Just to remind you, when you used to prepare control accounts, you had to start with the balance by the beginning of the year, balance brought down for the car data, whatever it is. Then you had to, from a question of control accounts, you had to find out what else affects data. Maybe there was bad debts, whatever it is, bad debts are normally credited. Okay. Another one could be either return inwards. If there were any return inwards, you usually had to credit. Good. You also know if there are any discount allowed to debtors, we normally credit. Good. If there was any cash received from debtors, you used to credit. Come and say a cash received, whatever. If there was any credit sales, listen, you used to come and credit a debit. I am first reminding you how you used to prepare creditors control. For credit sales, you used to debit. Then from there, you used to get the balances carried down. Now, you have to get the balance carried down by the end of the year, whatever it is. Now, listen carefully. Now we want to apply this knowledge, but from the cash flow point of view. We are looking for cash received from customers. So you will feed in everything, listen, but this time the examiner will not give you this amount we are calling cash received. It is now your responsibility to get it now as a balancing figure. That amount called cash received from customers, you will be getting it as a balancing figure now. Cash received from customers. Listen carefully also. The other critical point I want you to remember is we are looking for, listen, we are looking for cash received from customers. I have not said we are looking for cash received from debtors. No, we are looking for cash received from customers. Debtors being part of the customers. We are looking for cash received from all of them. Listen, meaning when I use on the debit side, listen, when I use on the debit side this credit sales, then it means that the cash I'm going to get here as a balancing figure will be the cash I'm receiving from debtors. But because we are determining the cash received from customers, listen, then we normally don't use, for cash flow purposes, listen, we normally don't use the credit sales alone. Instead, listen, we use the total sales. Meaning, go to your income statement and pick the total sales. We know that total sales include credit sales. That total sales include cash sales. So when you use the total sales in this account, listen, when you use the total sales in this account, then it means that whatever you will get here as a balancing figure, whatever you will get there as a balancing figure will not only be cash received from debtors, no, it will include cash received from both cash customers and credit customers. Why? Because you have used the total sales. But if you only use credit sales, then the balancing figure you'll get there will represent only the cash received from debtors or credit customers. But because we are looking for cash received from customers, all our customers, then we are saying use the total sales. That's important. Good. So I am through now on how, listen, on how we shall be determining what we are calling the cash received from customers. You prepare a data's control account where you feed in everything concerning customers. Once you feed in everything concerning customers, there will be a balancing figure, and that balancing figure will be the cash received from debtors. Good. Now we go on. We have determined the cash received from customers. The second figure, don't try it fast. The second figure I want to remind you is how are you getting, again, the cash paid to suppliers? How are you determining the cash paid to suppliers? We have said there are three figures you need. One, we have said, is the cash received from customers. That one I've reminded you. Number two, now we are looking for cash paid to suppliers. Listen, again, which kind of suppliers are we talking about? We are not only talking about credit suppliers. We are talking about even the cash suppliers. Those suppliers from whom you bought goods on cash basis, and from those suppliers to those suppliers you bought goods on credit, to all of them, how much did you pay to them? That's why we are not saying, listen, that's why we are not saying cash paid to creditors. We are saying cash paid to suppliers, not cash paid to creditors. No, we are saying cash paid to suppliers. Good. So to get the cash paid to suppliers, again, we shall be preparing an account called creditors control, or just creditors. Listen again. You will feed in all the information. You will feed in the information concerning this account. Again, there will be a balancing figure in this account, and that balancing figure will be the cash paid to suppliers. Just to remind you, when you are doing control accounts, you remember, whatever the creditors were there by the beginning of the year, you had to bring them down, whatever it is. Then if there were any return outwards, you remember, you had to credit any return outwards. Any discount received, you remember, you had to debit. Any cash paid to creditors, you had to debit, whatever it is. Then you also remember, when you are preparing control accounts, you used to come and say your credit purchases, whatever it is. Then, of course, you used to get your balance carried down. That's what I'm assuming. That's when you are preparing control accounts. But now, we are using this account to help us again get the cash paid to suppliers. Listen, not cash paid to. So again, you will feed in everything. Listen now, you will feed in everything concerning this account, but there will be this balancing figure which will be missing. That amount will be missing. That amount is what we are now calling the cash paid to suppliers. That's what you will now get as a balancing figure, whatever it is. The other thing is, listen carefully again, if on the credit side, again, listen, if on the credit side we use only the credit purchases, then it means what you are getting as a balancing figure on the debit side will only represent the cash paid to creditors. If you use the credit purchases, then whatever you will get as a balancing figure on the debit side will only represent the cash paid to creditors. But we are not looking for cash paid to creditors. We are looking for cash paid to suppliers. Listen now. Therefore, in order to get the cash paid to suppliers, just like I talked about the datas, we shall now not be using credit purchases here. No, we shall not be using credit purchases, but instead we shall be using the total purchases. Meaning, go find out from the question, how much were the total purchases of the company? We know total purchases include cash purchases and credit purchases. So by me using total purchases, then it means whatever I'll get here as a balancing figure in terms of cash paid, it will represent how much cash you paid to both the cash suppliers and to the credit suppliers and to your credit suppliers. Good. So I've talked about those two items, how to determine the cash received from customers and how to determine the cash paid to suppliers. Before I talk about the third one, because the third one is the most critical one, that is cash paid for services rendered, maybe we can put down something now. Let's put down something now. So andika somewhere as a subheading. Andika somewhere as a subheading, determination. Put it down as a subheading, determination of the cash flow from operating activities, determination of the cash flow from operating activities using the direct method. Using the direct method. Determination of cash flow from operating activities using the direct method. Using the direct method. And I think you can copy this now. You can copy this now. So just show like you're saying direct method, cash flow from operating activities. Then you come and say here, cash received from customers, cash paid to suppliers, cash paid for services rendered. Then you show you like you're getting the net at the total. Then you normally come and minus tax paid. Then once you minus the tax paid, whatever the amount you normally get, we normally push it to the extreme. Whatever amount you normally get, you normally push it to the extreme. Let me assume it's a positive. We said last time that if it's a positive, we normally call it net cash inflow. We normally call it net cash inflow from operating activities. Net cash inflow from operating activities. Good. Net cash inflow from operating activities. So copy those three figures. That is cash received from customers, cash paid to suppliers, cash paid for services rendered. Then get the total. Then you minus tax paid. Then you come and say net cash inflow from operating activities. Good. Then below that, if you are through with the copying, now we want to discuss the two that we have already mentioned. We want to discuss the two that we have already mentioned. So finish, we discussed the two we have already discussed. We want to put them down. Then another paragraph, if you are through, another paragraph, if you are through, you can say this. To determine the cash received from customers, a debtors account is prepared. You can say that. To determine the cash received from customers, a debtors account is prepared. To determine the cash received from customers, a debtors account is prepared as follows. A debtors account is prepared as follows. So maybe you can copy this account again. There is nothing to change there. You can copy that account. You can copy that account. We have said you bring down the datas by the beginning. On the debit side, the key important point I've told you there is that instead of using credit sales, you now use the total sales. You use the total sales. Then on the credit side, I've said you enter whatever else that is normally entered in a debtors control. I've given a few examples like bad debts, return inwards, discount allowed. Then you carry down the balance. Once you carry down the balance by the end of the year, you will get the balancing figure to represent the cash received from customers. You will get the cash received from customers. Good. So finish. We go to the second one. We go to the second one now. So that is the first one. Cash received from customers. So finish. We go to the second working. That is cash paid to suppliers. So finish copying. Okay, I hope you are through with the copying now of that account. Okay, I hope we can move on now. You can say that below that again. Put down this. Below that, you can say this to determine the cash paid to suppliers. You can say that to determine the cash paid to suppliers. We prepare a creditor's account as follows. To determine the cash paid to suppliers, we prepare a creditor's account as follows. We prepare a creditor's account as follows. Let's copy again the account. We had already written it down. There is nothing to rub. Just open that account of the creditors. Then bring down the creditors by the beginning. From the question you will be given. Then I've said on the debit side, you put in things like discount received, return outwards. Then on the debit side, on the credit side, I've told you, put in things like total purchases. I've told you the key word there is total purchases, because I've told you if you use credit purchases, then what you will get as a balancing figure will represent the cash paid to creditors. But we are not looking for cash paid to creditors. We are looking for cash paid to suppliers. That's why I told you, you remember to use total purchases. Then you carry down the balance. Then there will be a balancing figure in your account. That balancing figure will become your credit, your cash paid to suppliers. Good. So finish. I want to discuss the third item now. How do we determine the cash paid for services rendered? That's the one I want to talk about now. How do we determine the cash paid for services rendered? How do we determine the cash paid for services rendered? Okay. So let me finish fast so that I talk about it, because that's where the issues are. How to determine the cash paid for services rendered. Okay. So let me hope you are through now. Let me hope you are through. Now listen. When we are saying cash paid for services rendered, listen, we are talking of which kind of services. You as a company There are services you were given by various stakeholders. So we want to find out in total, what is it that you paid for those services? Kenya Power gave you service for electricity. You paid them for electricity. Employees gave you service, you paid them salaries, and so on. So we want to find out, in other words, we are saying, for all the expenses of the company, how much is the total you paid? For all the expenses of the company, how much is the total you paid to the various stakeholders who gave you those services? Now listen. So before I talk about how to determine it, listen. In a question on cash flow, the examiner will always give you an income statement. And in that income statement, let me assume this is how it will appear. You will be given the figure for sales, whatever it is. You will be given the figure for cost of sales, whatever it is. You will get your GP, whatever it is. Don't write. You will come and see admin expenses, whatever it is. You will come and see distribution expenses, whatever it is. Then you will get what we normally call profit from operations, whatever it is. Then we normally come and see your finance cost, whatever it is. Then you normally get what we call profit before tax. Now listen, we are looking for cash paid for services rendered. What are these services? The services are the expenses. Like in this case, we have these two categories of expenses. We have the admin expenses and we have the distribution expenses. Let me assume for now that from the question, your admin expenses are given as 100 million, while your distribution expenses are given as 50 million. Listen to this now. So in total, it looks like you charged, not like you charged, not like it looks like you actually charged your P&L account. You charged your P&L account with total expenses amounting to 150 million. But the question is this: did you pay the 150 million for those expenses? The answer is no. Why? Because you know, listen, because you know, the rule of accounting says when you are preparing income statement, you use a concept we normally call accrual concept. Accrual concept states that you recognize costs when they are incurred, but not when money is paid. So, whenever there was an accrual which you incurred, you recognize costs when they are incurred, but not when money is paid. So out of this 150 in total, there could be some expenses you charged, which you never paid for them. Why? Because of the accrual concept. But we want to know actually, in cash, what is it that you paid? You could have paid maybe a total of 140, you could have paid a total of 120, or you could have even paid a total of 190 because some expenses were prepaid. We want to look for what is it that you paid, not what you charged. It could be that you paid more than 190, more than 150 because of some prepayments, or you could have paid maybe 140 because of some accruals and so on. But what is it that you actually paid in cash? Get the point there? Good. 2, listen. Within these two expenses again, there are some other expenses which may not be in form of accrual as prepayment. There could be other expenses you charged in the P&L account, yet you never paid anything for them. For example, within the admin expenses, you could have charged depreciation on office equipment. Of course, we know when you depreciated your office equipment, you must have classified it as an admin expense. But did you pay for that depreciation? No. Within the distribution expenses, you could have depreciated your delivery van. But that depreciation of delivery van, does it involve cash? No. So we want to know in true sense, in cash form, what is it that you paid in cash? This is where I want you to be a bit careful now. Now, for us to determine the cash paid for service rendered, we shall be opening an account called expenses. We shall be opening an account called expenses. Listen. Again, you will feed in all the information concerning expenses. Once you feed in all the information concerning expenses, there will be a balancing figure, and that balancing figure will now represent the cash paid for services rendered. So let's start feeding. Listen, you go to the balance sheet, for example. Every question on cash flow, listen, will give you two balance sheets. Let us assume one for last year, 2020, another one for this year, 2021. Then, among your current assets down there in your cash flow, in your balance sheet, maybe you had a prepaid insurance. One figure last year, one figure this year. Maybe among your current liabilities there, you had some electricity owing. One figure last year, another one this year. So these are items that will automatically become the opening balances in this account. So if I go to the balance sheet last year and I find there was a prepaid expense by whatever name, we know prepaid expenses are an asset. Listen, we also know an asset is always a debit balance. So you'll come and bring it here. You say you're prepaid, brought down, whatever it is. Then you go to the same balance sheet last year. Among your current liabilities down there, there was electricity owing. Electricity owing is a liability. A liability is always a credit balance. So you will come and say here, owing brought down. Whatever it is. Listen. That means once you bring down the balance, like I brought down for debtors, like I brought down for creditors, listen now, then I now go to the income statement that the examiner has given me. I go to the income statement and pick the charge for the year. I pick the charge for the year for expenses. Like for example, I can see admin, we charged 100. Listen. That amount has been deducted in the P&L account. Deducting it in the P&L account means it has been debited in the P&L account. It has been debited in the P&L account. So because it has been debited in the P&L account, automatically the completion of double entry means you come and credit this account. You come and say your admin expenses, that 100. Same, we debited P&L account with the distribution expenses of 50 million. So you come and credit here, you say your distribution expenses. Now listen carefully. We are trying to look for what is it that we paid for these two services. The admin expenses and the distribution expenses. Get the point there. So, I have also told you, within these two charges, there are times you could have charged something within them which no cash was involved at all. No cash was involved. Yet you charged it either as an admin or as a distribution expense. Yet no cash was involved. But you had to charge it because the accounting rules says you charge. I've already given you an example. Like if you depreciated your delivery van, you must have classified it as a selling and distribution expense. So, but because it is included in that 50, that depreciation, maybe it's 2 million shillings depreciation. And I want to know, listen, how much is it that I paid for distribution expenses? But within that distribution expenses, there is a depreciation of 2 million. So for me to remove it from there, listen now, I want to remove it from there so that then I'll get a balancing figure now, which will represent the cash paid for service rendered. So to remove from this distribution expense, to remove that 2 million, which I'm assuming is depreciation, you will now come and debit whatever is your depreciation charge for the year. By debiting, you are removing it from the charge for the year. It could be you depreciated office equipment. It could be you depreciated office delivery van, whatever it is. So we are asking ourselves, listen from the question. Listen from the question. Are there any non-cash items that you could have charged within either admin or the distribution, listen, where no cash was involved? Is there something that you could have charged within either the admin expenses or the distribution expenses where actually no cash was involved? I've given you one example, depreciation. But I want you to give me more examples. I want you to give me more examples of non-cash expenses that you could have either charged and classified them either as admin or distribution in a question. Somebody chat now. Somebody you chat and give me. Somebody chat and give me. Chat and give me a few examples. There are too many examples of expenses that your company could have incurred and which don't involve cash, but you must have put them somewhere, yet they are not involving cash. I'm not asking you to think in terms of admin or whatever. Think of an expense that your company incurred, but nothing went to the P&L account in terms of cash. Daniel, no. Salaries and wages you normally pay. Loss on disposal, that's one. Good. Lillian, that's correct. Loss on disposal. Another one could be a provision for like loss. That's another one. Good. Another one. Good. Give me another one. Give me another one. I'm still looking for more. There is a lot. There is a lot. Listen. A provision for bad debts. Good. Even when we were discussing, listen carefully, even when we were discussing the indirect method, even that time, we came across them. We had to use the non-cash items, you remember? Yes. So let me quote a few. Now listen. Within the selling and distribution expenses, like somebody has given us, listen, within the selling and distribution expenses, you may have charged provision for bad debts. You anticipated that some of your debtors are likely not to pay you, so you made a provision for bad debts. Good. When you made a provision for bad debts, listen, you must have debited P&L account, and you included it among the distribution. Is it a cash item? No. So come and remove it. This is provision for bad debts. Listen. Even, listen carefully now, even the bad debts, we talked about them last time. Even the bad debts, when you write off a data as a bad data, do you actually pay cash for that amount? No. When you write off a data as a bad data, you normally just credit debtors and you debit bad debts. Then by the end of the year, you take the amount of the bad debts to the P&L account. This time, you would have classified it as selling and distribution. So we are talking about even bad debts themselves, whatever they are. Another one somebody has given us is impairment. maybe you impaired your goodwill and you charged it as admin expense. So when you charge impairment, obvious again, that is not an expense you paid in cash. It is an uncashed item, whatever it is. Now listen. So it means, therefore, it is like I am using the same figures I used last time when we were dealing with the direct method. Okay? You can see all these are non-cash items that we were using. Good. So it's the same. You just look for what are the non-cash items. Good. Another one could be amortization. Good. Now, listen carefully, because this is where I am now. I told you this is where the issues are. Now, somebody has given me within your list loss on disposal. Loss on disposal. Listen carefully. When it comes to loss on disposal or a gain on disposal, listen, there are times you will use them in this account. Listen carefully. There are times you will use them in this account, and there are times you will not use them in this account. For loss on disposal and maybe gain on disposal, there are times you will use them and there are times you will not use them in this account. So I will talk about when do we use them and when don't we use them. For now, listen, for now I want to assume that the question does not have any gain or loss on disposal. For now. So, let me assume therefore that you have gone to your balance sheet last year. You have gone to your balance, brought down. If it was accruals, you brought it down. If it was a prepayment, you brought it down. Then I have told you, you have gone to your income statement and you have picked the charge for the year for expenses. Listen, some questions will call it operating expenses in the P&L account. Some questions will call it selling and distribution. Others will call it admin expenses. It does not matter whichever name. Just go to the income statement and pick the charge for the year for expenses. I've told you that charge is normally debited in the P&L account. Come and credit this expense account. Then, listen, I've told you, within that charge, whether it's one amount or two amounts like now, within that charge, is there any non-cash item? That's what you will ask yourself. Why? Because I told you we are looking for cash paid for these two services. These two services rendered to the company in terms of admin and distribution. So you ask yourself, within those two services, are there any non-cash items? Yes. One of them could be depreciation. That's what we have said. Two, within them, there is provision for bad debts. Remove it. Within them, there could be bad debts. Remove it. Within them, there could be impairment. Remove it. Within them, there could be amortization. Remove it. Listen, let me now assume that you are through with all of them from your question. That you are through with all the non-cash items now. You are through with all the non-cash items. Once you're through with the non-cash items now, then you go to the balance sheet by the end of the year now. See what you are carrying down by the end of the year. See what you are carrying down by the end of the year. I want you to listen again carefully. If by the end of the year you have an electricity that is still owing by the end of the year, that again is a liability. I want you to listen carefully. That's a liability. A liability is always a credit balance, as I brought down. Just like I brought down this one opening, it's a credit balance. Listen, but by the end of the year, you cannot have a brought down without a carry down. So what you will do first, you will come and say you're owing carried down. Whatever is the closing balance by the end of the year in terms of an accrual. I've told you, any expense that's accruing or owing is a liability. I've also told you, a liability is always a credit balance. But I've also told you, you cannot have a brought down by the end of the year without a carry down. So that's why we always first carry it down on the opposite side, so that you will bring it down on the credit side to appear as a liability. Just like you brought down the opening one on the credit side. Why? Because it was carried down last year. But for the closing one now, before you bring it down on the credit side to appear as a liability, you must first carry down. Listen, same. You went to the balance sheet this year, and among your current assets, you saw there was a prepaid expense, maybe electricity, insurance, whatever it was. It is an asset. A prepaid expense is an asset. An asset is always a debit balance. I hope you're getting. An expense is always a debit balance. But again, by the end of the year, you cannot have a brought down on the debit side without a carry down. So you'll come and say here, prepaid carried down. So that when it is brought down, it will be reflected now as an asset. Good. Don't confuse the closing balances. If it's a liability, don't come and enter it on the credit side, because it must appear on the credit side as a brought down. So don't carry down on the credit side by the end of the year, like I brought it down on the debit by the beginning, on the credit, sorry. If it's an asset, we know assets is always a debit balance. So don't come and enter it on the debit first. No. Because it must be reflected as a debit balance when brought down. Good. Now listen. So let me assume that you have entered everything now in this account called expenses. Once you enter everything now, there will be now a balancing figure which will now represent the cash paid to suppliers, for services rendered, as a balancing figure. That's how we shall be determining the cash paid for services rendered when the question is asking us to use the direct method. I hope you have understood. Now, I have left one item which somebody gave us, and I told you that's a gain or loss on disposal. And I want you to listen carefully now, because that's where issues come in terms of your past papers now. Listen. Now, one company, I'm introducing now, one company had two accountants. Accountant number A prepared the income statement of the company this way. He brought in the sales, cost of sales, got the GP, he minus expenses, whatever it is, minus depreciation, distribution, whatever it is, and he got here what we are calling profit from operations amounting to 300 million. Good. Another accountant, same company, was given same records. And that accountant B prepared his income statement or her income statement this way. Sales, cost of sales, GP, profit on disposal. 5. Got whatever it is, admin expenses, whatever it is, distribution expenses, whatever it is, loss on disposal. 10 million. Got whatever you got. That is what we are calling profit from operations. Listen carefully. This second accountant also got the same 300 million as the profit from operations. So both of them got the same profit from operations. But their presentation of the income statement is different. Listen. Accountant number A has not told us where he used the loss on disposal and the gain on disposal. That's accountant A. Accountant B has shown us where he used theirs. The loss on disposal, he showed it separately. The gain on disposal, he showed it separately. So I want you to listen carefully now. We know the gain or loss on disposal is a non-cash item. So tell me this. If you are to prepare the cash flow from the accountant B, this is accountant B, P&L account, when you will be preparing here his expenses so that you determine the cash paid for service rendered. We have already agreed. Bring down the owing. Correct. Bring down the prepayment. Correct. Go to the income statement. I told you. Go to the income statement. Pick the charge for the year for expenses. What are the charges? Admin and distribution. Those two. Admin and distribution. Those two. Pick them. Whatever they are, bring it here. Admin, whatever it is, and distribution. Whatever it is. Listen. Then I have told you, ask yourself, within those two charges, are there non-cash expenses or items within them? Yes. One of them could be depreciation, remove. Another one could be impairment, remove. The other one could be amortization, remove. And many others. But now, listen. For accountant number B, he has a loss on disposal. He charged it as an expense. Listen carefully. Will I also come and say that I also removed that 10 million in this account and say a loss on disposal? Will I come and say for him, accountant B, that I less the 10 million loss on disposal? It's true, it's an expense. It's true, it's an uncash item. But will I come and remove it the way I've removed depreciation, amortization, and impairment? Will I do the same? I want to hear from you. You are writing to me either yes or no. I'm not asking you to give me the reason. You are either telling me yes or no. For accountant number B, will I come and remove the 10 million like I removed the amortization, impairment, depreciation? Will I come and remove the 10 million as much as it's true? It's also an uncash item. Will I do that? I want you to tell me yes or no. For accountant B, I'm waiting. For accountant number B, will I come and remove the 10 million? As much as it's true, it's an uncashed item. Will I remove the 10? It is either yes or no. Somebody has said yes. Somebody has said no. Somebody has said yes again. Okay. One more opinion. One more opinion. Yes or no? Okay. Now listen. What are we looking for? Listen carefully. What are we looking for? We are looking for cash paid. Listen carefully. We are looking for cash paid for services rendered. Services rendered. Which are these services? Whatever you got here as admin and distribution. Those two are the ones you brought here. And they are the ones we are looking for. What is it that we paid for them? Listen. So we went further and asked ourselves, within these two charges, is there an uncashed item? Yes, depreciation, amortization, impairment. Listen. Now I realize that the company also has incurred a loss on disposal. Listen. For company B, I will ask myself this question. For accountant B, I will ask myself this question. As much as it's true the loss on disposal is an uncashed item, listen, is it affecting what I am looking for? Is it affecting what I am looking for? I am looking for cash paid for services rendered. Which services? Admin and distribution. That's what I'm looking for. Cash paid for those amounts. Then I realize that the company also has a loss on disposal, which is an uncashed item, true. But, is it affecting what I am looking for? Listen, the answer is no. It is not affecting what I'm looking for. Why? Because it is not part of either admin and it's not part of either distribution. For accountants, B, P&L account. So for that case, listen, for that case, you don't have to use it here. You don't have to use it there. No. You don't have to use it because it's not affecting. Listen, it's not affecting what you are looking for. But let's go back now to accountant A. Accountant number A also, using the same records, he got a profit of 300,000 or 300 million that year. So we need to ask ourselves, this is one company. So this guy must have used the loss on disposal somewhere. Where do you think he used it? He must have used the loss on disposal somewhere. So listen carefully. For that accountant A, if we sold a motor vehicle and made a loss on disposal of 10 million, then accountant number A must have considered it as a distribution expense. Accountant number A must have considered it as a distribution expense if you sold a motor vehicle. Or if you sold office equipment and you made a gain on disposal, accountant number A must have included it among admin expenses. Listen. So for accountant number A, when I want to determine their cash paid for services rendered, then for him, I will automatically come and say, is it affecting what I'm looking for. I'm looking for the cash paid for these two services rendered. Is that loss on disposal affecting what I'm looking for? The answer is yes, because they are within one of them. If it's a loss on disposal of motor vehicle, it's within the distribution. If it's a loss on disposal of office equipment, it is within the admin. Listen, so for that case, now I'll be required to come and remove it now. So I'll come and now say here, loss on disposal. This is loss on disposal. I come and remove it. Like I've removed the other non-cash items. I hope you have understood that point first. Good. About the loss on disposal. Listen, Badu, we are not through yet. When we look at these two income statements for the same company, accountant number B has shown us that the company made a gain on disposal of 5 million. Is it a non-cash item? Yes. Now, again, when I'm preparing the cash flow for accountant number B, and I prepare this expense account for him, I will ask myself, that gain on disposal, is it affecting what I'm looking for? The answer is no. Why? Because it has been shown separately. It's not within the admin and not within the distribution. It has been shown separately. So, does it affect what I'm looking for? The answer is no. Hope you are following. The answer is no. But what about accountant A? Accountant number A, using the same records, this accountant has not told us where he used his 5 million. Yet we know the company made a profit. Maybe you read the additional information somewhere and he told you sold a motor vehicle and made a profit of 5 million. But I can't see where accountant A has used his 5 million, yet the company made a gain on disposal of 5 million. So the question is, where do you think accountant number A has put his 5 million? How do you think he treated his 5 million? We sold a motor vehicle and made a gain on disposal of 5 million. Where do you think accountant number A used his 5 million? Somebody can suggest. Where do you think accountant A used his 5 million? They got the same profit from operation. Where do you think accountant A used his 5 million? Somebody suggest, how did accountant A use it? How did he use it to get the same 300 million? I want to hear some suggestions. Where do you think accountant A used his 5 million? Yes. Harakisha kidogo. There's a lot we want to discuss. Where do you think accountant A used his 5 million? Wow. Where do you think accountant A used his 5 million? I want to hear some suggestions. We sold a motor vehicle and we made a gain on disposal of 5 million. Where do you think accountant A could have used his 5 million? No. Catherine, no. We don't include it in sales. We are not saying, listen, I am not talking of, listen, here is a motor vehicle that had a book value of 10 million. You sold it for cash of 15. It had a book value of 10. You sold it for cash of 15. I'm not talking of how you treated 15. I'm talking of how you treated the 5 gain, not the 15. So it is not part of the sales, no. It's not part of the sales. Okay, now listen carefully now. This is where I was saying it becomes a bit tricky now. Listen. Now, for accountant number A, this is the conclusion we shall arrive at. Listen. When accountant number A was determining the figure for distribution expenses, when accountant A was trying to determine the figure for distribution expenses, he kept adding those expenses. Depreciation of delivery van, provision for bad debts, advertising, salesman's salary, and many others. Listen, when he did that, he got the net total there. Let's assume 50. Then he realized, but we have sold a motor vehicle which is used for distribution, and we made a loss, a gain on disposal of 5 million. So this accountant number A, he must have decided, let me net that profit on disposal, let me net it off against the other distribution expenses. Let me net it off against. So akakuja akabaki na 45. It is that 45 that accountant A took it to the income statement. That 45. So we are concluding, listen carefully, that when you don't see the gain on disposal in the income statement like accountant B, when you don't see the gain on disposal, listen, then you conclude that that profit must have been netted. It must have been netted against, somebody has even given us that information. Maybe a net of the gain included in the distribution. Correct? Correct, Florence? That's correct. That you conclude that the gain on disposal, because it relates to distribution, it must have been netted against the distribution expenses. If we sold an office equipment and we made a gain of 5 million, then you will conclude it was netted. Listen, it was netted against the admin expenses. Listen now. If that is said, listen, you brought in your income statement here, you brought in your cash, your P&L account, 45 here. This 45 called a distribution. When you are preparing the expense account for this accountant A, you took that 45 and brought it here as your distribution expenses. Listen, but the question is this: is that the true amount of the distribution expense? Was that the true amount of the distribution expense? The answer is no. The true distribution expenses were how much? 50. But when we realize we made a gain of 5 and it relates to this category, then automatically, therefore, you must have netted it against those expenses. Then you remained with a balance of 45. Listen, that 45 is what you brought here now as your distribution expense. But the true distribution expenses were not 45, they were 50. Listen, so this distribution expense is less than it should be. It is less. The one you have brought in the income statement is less than it should be. So to correct this amount of 45 now, listen, with that gain on disposal, With that gain on disposal of 5, we shall be bringing it and adding it here. Gain on disposal of 5. So that you restore the true distribution expenses to 550 million. I hope you have understood. Now listen, as I summarize. To determine the cash paid for services rendered, that's important. We have said we shall be preparing an account called expenses. I've told you, feed in everything concerning expenses. Bring down the prepayment, bring down the owing, go to the income statement, pick the charge for the year for expenses. Then I've told you, ask yourself, within the charges, are there non-cash items? Yes. Depreciation, provision for bad debts, impairment, bad debts, amortization, and so on. Then I've told you, that's the key point. Gain or loss on disposal. Are they non-cash items? Yes. Are there times we use them in the expense account and there are times we don't use them? Yes. I've told you, when do we use them? In the expense account. We use them, listen, when they are not shown. We use them when they are not shown separately in the income statement. Like accountant number A did not show us the gain or loss on disposal. When you are determining the cash paid for his services rendered, you have to use them. We use them when they are not shown separately in the income statement. Otherwise, if they are shown separately, like accountant B, if they are shown separately in the income statement, then do not use them in your expense account. I hope that point has been understood, because there are some questions in your past papers which give you P&L account of accountant A, and there are some which give you the P&L account of accountant B. So, and when you are told to prepare cash flow statement using the direct, and there is a gain or loss on disposal, that you must ask yourself. Good. So I think now we can put down that summary now. We can put down that summary. So andika hivi, to determine, put down that note, to determine the cash paid for services rendered, we prepare an expense account. We prepare an expense account as follows. We prepare an expense account as follows. Good. So let's prepare it as follows. To open that expense account, bring down the balance. Bring down the balance. I've said if it's a prepayment, you debit. If it's an owing, you credit, as I brought down. Then I told you, you go to the income statement, pick the charge for the year, those two. Then I've told you, go through the question, find out whether there are any non-cash expenses. Yes, remove them. Any non-cash expenses that is part of the admin or part of the distribution, remove them. 1, depreciation, provision for bad debts, impairment, amortization. Then I have told you, carry down the balances. By the end of the year, I've already explained. Then I've told you, get the balancing figure. Then we have gone further and said, for loss on gain on disposal, specific. That one we shall discuss it. But let's just put them in first. We shall put a note for them. Let's first put them first. We shall put a note for them. Okay, so copy that. Then we shall put an NB for this gain or loss on disposal. We shall put an NB for the gain or loss on disposal. But otherwise, just copy. Then you get whatever it is as a balancing figure to be the cash paid for all the services rendered. Okay, hoping you are through. Copy. Then we want to put that NB. We want to put that NB now. So copy. I hope you are through. We want to put our NB. Okay, sema hivi. I hope you are through with the copying. Aya, sema hivi. NB down there. I hope you are through. Put down this. For the gain or loss on disposal, for the gain or loss on disposal, you are putting down the note. The gain or loss on disposal, comma, for the gain or loss on disposal, comma, we use them in the expense account. For the gain or loss on disposal, we use them in the expense account if they are not shown. We use them in the expense account if they are not shown separately. If they are not shown separately in the income statement. If they are not shown separately in the income statement. For the gain or loss on disposal, we use them in the expense account if they are not shown separately in the income statement. Please stop. Please stop. Otherwise, if they are shown separately, in the income statement, comma, do not use them. Do not use them. Otherwise, if they are shown separately, do not use them in the expense account. Do not use them in the expense account. Do not use them in the expense account. In the determination, do not use them in the expense account. In the determination of the cash paid or services rendered. Do not use them in the expense account in the determination of the cash paid or services rendered. Good. Okay. Now, so maybe for today, we could stop there. I want to mention something to the new guys. Today being a free class again, let me explain some few things to the new students. Those who have joined us for the first time today, if you wish to continue with us, I'm talking to the new students now. For the old students, you are aware of this, so you don't need this information now. So for you, we can meet next time. But for the after the new students who have joined us today for the free class, the modality is this. Assuming you want to join us for the normal classes, that is for the advanced financial reporting, we normally have either early morning classes or evening classes. If you want to join us, we normally have either early morning or evening classes. Our early morning starts from 5:30. Our early morning starts from 5:30 in the morning to 7 a.m. every Monday, Monday, Wednesday, and Friday. Those are the 3 days for the early morning. For the evening, we normally start from 8 p.m. to 10 p.m. Again, every Monday, Wednesday, and Saturday. Those are the 3 days again for the evening. Listen, in case you miss a class, assuming you are learning in the evening and on a Saturday you are working late or you have a function to attend, or maybe in the morning you have missed a class, does it mean that that class is gone? No. Our system is such a way that in case you miss a class, you can still go back to the group where the link was posted and you can be able to watch the video of the class that you missed. Maybe alternatively, I've taught you and you feel you want to refresh yourself. Maybe there's something that bypassed you and you want to remind yourself. Just go back to the group where the link was posted, click on the link, and you'll be able to watch your video again as many times as you want. It may happen that some of you may not be available in the early morning, not available in the evening. You can decide to buy what we call pre-recorded videos, where you get your videos, all of them for the syllabus at once, so that you listen to them at your own free time, at your own pace. That's another way you can do it. For either early morning or evening, we are charging, whether early morning or evening or pre-recorded, we are charging 4,000 shillings for the whole semester. But of course, we are accepting payments in installments. We are accepting payments in installments. So if you are interested, of course, if you join now, listen, if you join now, we shall also give you the videos of all the previous. We shall give you the videos of all the previous classes. So don't panic that if you join now, will you miss the classes that we have already taught? No. We shall also be able to give you the classes, the videos of the classes that you have already missed. Good. Now, if you are interested in joining, you can call me on this number, 0722 65 8875. If you are interested, you can call me on 0722 65 8875. Okay, good. Then, now listen. It may happen that some of you have friends who are here and they are doing financial reporting of the intermediate level. We also offer that. So if you have friends who are doing intermediate, the classes are every Tuesday, Thursday, and Friday. Same everything. In case they miss, they'll get the class of the class they missed, and so on, and the same modality. Same charges, 4,000. We are also offering financial accounting, that is financial reporting for intermediate, or what used to be called Section 3. We also are offering financial accounting for Section 1, or what is now called foundation level. That is financial accounting. So if you have friends who want to do financial accounting, we are also offering it. Okay? Good. that is for financial accounting of section 1, or the ATD1 and ATD2. Okay, that is it. That is section 1, foundation, which we now call foundation level. Good. Again, I will ask you, please subscribe to my YouTube channel. Please subscribe, whether you are a student or not. Please subscribe to the YouTube channel so that you can get notification whenever we post videos on our YouTube channel. Please click that subscription button down there, and you can also click the notification bell so that you may be notified every time we post videos. Good. Of course, our YouTube channel is called CPA Joseph Njuguna. Our YouTube channel is called CPA Joseph Njuguna. That's the name of the YouTube channel. Good. I don't think I've left out anything else. This is especially for the new students who have joined us today for the free class, that in case you wish to continue with us, those are the timings for early morning, timings for evening. Then I've said, if you can't be available in the early morning or evening, you can buy what we call pre-recorded videos. The charges for every one of them is 4,000, and we also accept payments in installments. Told you, you will still get the videos of the previous classes that we have already taught so far. Good. I've also told you, in case you miss a class, don't panic. Go back to the group, click on the link, and you'll be able to watch your video at your own free time. Then I've said, call me on this number, 0722 65 8875. Good. I've told you, we are also offering financial reporting of the intermediate and financial accounting of foundation level or CPA section 1. Otherwise, good night for now. Good night for now, unless there is somebody who has a comment and he wants to say something. Yes, we shall revisit. Very tricky. That's true. James, that's very true. I will revisit it because it's true. It's a bit tricky. The gain or loss on disposal, one has to be very careful. I'll repeat it. Don't panic. Don't panic. Are you okay, Kiama? We shall have to repeat it. We shall even have to do a question. Okay, anybody with a comment before we close the class of today? Okay, if there is no comment, especially for the new, okay, thanks, sawa. If there is no comment, especially for the new students, so if you are preparing to join, please call me on that number, 072265 8875. Otherwise, good night, everyone. Good night. Good night. Good night for now. Bye.